Bring on board Siddharth Khemka of Motilal Oswal to give us his perspective. Siddharth, very strong numbers from LG. Now, this margin recovery that we've been waiting for has finally arrived. In fact, that surprise margin dip has been reversed. Let me put it slightly differently. How are you looking at LG's numbers and what's the Motilal view?
Hi, good afternoon, Harsh. I think after listing and we have seen a dismal FY26, FY27 for LG has started on a strong note. Q1 revenue growth of 15% and margin expansion helped EBITDA improve 26%. What we have seen is that growth has remained broad-based as well as if you look at across segments, be it washing machines, premium doors, premiumization across segments, and LG with its leadership has finally started delivering the numbers it promised. Even going forward, we expect with the Q3 onwards, the festive season demand should remain strong, and we expect a mid-teen kind of revenue growth and a double-digit kind of EBITDA margin, leading to supporting the overall earnings growth of about 35% in FY27. So with that, we believe that the valuation uptick could continue as the stock has largely remained sideways to marginally under pressure post-listing. With this kind of performance and a positive outlook, we believe the stock could do well. For now, our target price was around 1800, but since the call was there today, and we will be revising our estimates as well as target price, I think late today evening.
Okay, all right. Got your point, Siddharth. Kunal, I wonder what the view on LG is, and is this one of the top-rated names within consumer durables that you would look at?
Yeah, it looks like now that after this breakout, the stock could come back into its own, because this is a very strong, solid, and a much-needed breakout for LG Electronics, because the stock over the last, I think, 4 months was stuck into a 150-point band, 1500 to 1650 thereabouts, and the stock was trading into a more of a volatile fashion within this 150 or a 10% band approximately for LG. But I think after this breakout today, the volumes being exceptionally high, one of the best volumes the stock has clocked today on the daily charts, and this indicates that we are looking at a breakout of sorts for LG. The only concern over there is that many a times we've seen that when stocks give such kind of a strong thumping up move, they remain sideways for the next couple of days. The volume drops down for the stocks, the momentum slips down, and then these stocks go into a gradual uptrend further. So near-term wise, maybe I think for the next couple of days, the stock might see a bit of a consolidation. But today's breakout is very strong. This opens up legs for almost 1800 to 1850 plus for LG India from the current levels.
Okay, that's the take coming in on LG Electronics and how that stock has been. Telecom, of course, is that key story which is holding out today. Bharti 2.5% higher, Idea as well following in tow, another 5% off an uptick. And just wanted to get your sense in on, the telecom sector, Siddharth, because, I mean, Bharti has been one of those very stable names, right? Consolidated off late, of course. But having said that, it's been one of the key leadership, core portfolio kind of names. Having said that, now with all the tariff changes that one is seeing actually happen and Bharti actually taking the lead, would you say that you can add positions at Bharti even at these levels?
So yeah, I think definitely the entire telecom space has been consistently delivering strong numbers. But I think the tariff hikes, or you can say the price hike, that has remained eluded for some time now, and that has been the core reason for the sector stocks to remain kind of consolidating. But if you look at Bharti consistently delivering strong growth quarter after quarter, ARPU seeing improvement because of the customers uptrending, and very strong cash flows performance both in India as well as Africa business also showing strength. Now I think Bharti has taken a unique step by reworking the plans that are available, and in a way, without increasing the prices, just making the higher packs available, has effectively kind of taken a price hike, which I think the market has taken positively. So definitely a stock worth looking at current levels. A long consolidation has been a market leader. I think whenever the Jio IPO comes, that would be another additional trigger for the telecom sector, given the kind of valuation Jio is seeking compared to Bharti, where the profitability is much better. And hence, we see that overall, the core business doing well, the digitization helping its newer business segments, as well as other market triggers looking pretty strong. So we continue to remain positive on Bharti. We have a buy rating and a target price about 2,335.
Right. Okay. That's the take coming in on what the telcos, of course, are throwing up in today's trading session. But Galaxy Surfactants, that also has been quite the active stock today and has delivered a standout first quarter as well, beating the street estimates. In fact, Snehi joins in back to talk about how the quarterly performance was. Snehi?
Absolutely, a very good quarter coming in for Galaxy Surfactants this time around. More than the strength in the numbers, it's the management commentary wherein they've hiked their guidance going ahead, and that's the reason why the stock is locked up in upper circuit of 20%. Just decoding what these numbers look like on a consolidated year-on-year basis, the revenue is up about 40%, EBITDA has more than doubled, net profit has also doubled on a year-on-year basis, and we've seen very stellar 430 bips expansion in margins to 14% when the estimate was just 10%. So a beat on all fronts. Overall volume growth has been in mid-single digits. However, what really stands out is that the India business has returned to double-digit volume growth after nearly 2 years. So positive here. The rest of the world has clocked in mid-single digit volume growth, and their Africa, Middle East and Turkey business, they saw some low single-digit year-on-year decline in volumes on the back of geopolitical action, but sequentially it's a high teens volume growth coming in over there too. Mid-single digit volume growth for the performance surfactant as well as specialty care segment, so that looks good. Now let's get to the crux in terms of the management guidance. While FY27 volume guidance of 6 to 8% has been maintained, what looks good is the EBITDA per metric ton guidance that has been hiked to 24,000 to 25,000 rupees per ton now from the earlier 19,000 to 21,000 rupee guidance that the management has given, and that is something that has got the street really excited. They've announced additional capex of 150 crore in FY27. And what adds to this momentum is that they have also said that they're not seeing any pricing pressure for now. So bunch of positives in Galaxy Surfactants earnings as well as management commentary, and that's why the stock is up 20% as we speak.
Okay, thank you so much for that, Snehi. Siddharth, I wonder how you're looking at this one, and what would be the ancillary beneficiaries of this kind of tailwind, because the numbers clearly looked extremely strong, even when we look at the first glance at the numbers as well.
So yeah, I think Harsh, the entire specialty chemical space, look at across the segments have reported strong numbers, be it Atul, be it Deepak Nitrite, be it Navin Fluorine, and now Galaxy Surfactants. Again, for Galaxy, FY26 very dismal, but started Q1 on a very strong note. I think key important factor to note here is that margins have seen some sharp improvement, and plus with the improving outlook, I think there would be a lot of upgrades in terms of estimates, and valuations are still comfortable, and hence we believe that this can be one of those stocks where in the chemical space where upside could be again increased going forward. What we like within the overall space, I think Navin Fluorine consistently delivering quarter after quarter, strong Q4, FY26. Q1 also started on a strong note. Something which is showing recovery again, Deepak Nitrite, one of the stocks which has been seeing a lot of correction and now again showing strength. So some of these will be kind of, I think, bottoming out kind of picks, while Navin continues to show strong performance.
Okay, that's the take coming in right now on some of those select stocks. Just looking at what the market texture as well is like. And, curious to see what's really happening within metals, Kunal, because after that big bump up, you're seeing some of these metal names completely unwind their gains that they made in the, in the first half of this trading week. Look at Inalco, for instance. It's down a good 6% today.
Yeah, I think Alco, is the only one which has been falling very sharply. But I think most of the other stocks, I was looking at Hindalco, that stock has seen a good recovery from the intraday lows. The candlestick pattern today is very bullish. It's like a bullish hammer pattern being formed for Hindalco on the daily charts. Tata Steel has managed to come back towards the retest of the previous lows. I think the last month low was around 180 for Tata Steel. The stock has come back to that level on an intraday basis. JSW Steel has come back towards the 50 moving average. SAIL also, I think, has come back towards a retracement on the 170 mark. So I would sense most of the metal counters have completed their phase of mild correction. Now I would sense that potentially start of next week or maybe from the mid of next week, there could be a second round of rally which could start off from the metal pack. So would be bullish on the counters. Hindalco, even Tata Steel now currently in fact at 180 looks to be one of the stronger bets in terms of risk reward.
Okay, that's the take coming in on some of the metal names and where they're standing off in trade. Apollo Hospitals, that of course, I don't know on a net basis this week how the stock is performed, because start of the week you had that scare come in from the Parliamentary Standing Committee on a cap perhaps on hospital tariffs for average rooms. And that really took a knock first. And then Apollo Hospitals came out with a very steady set of earnings. And since then, you've seen a rebound come in the stock in the last two trading sessions. Siddharth, where do you stand now when it comes to healthcare as a pack?
I think, Aisha, if you look at some of these companies, Global Health, which is Medanta, Apollo Hospital, some of the others which are not under coverage but Rainbow Child, they put strong numbers. Now, the only overhang that remains is the regulatory risk, which you highlighted a couple of times, that what the government can do in terms of regulating the prices. Beyond that, I think some of these hospitals, they are maturing because the past capex is now looking at turning around and adding to the profitability. If you look at specifically Apollo Hospitals, I think management is guiding for a 20% hospital revenue growth. The established hospitals EBITDA margins at 26% are expected to sustain, while some of the newer hospitals, they are likely to add to the overall profitability. So we continue to remain positive both on Global Health, which is Medanta, and Apollo Hospitals. From a long-term perspective, even if we believe that the government could kind of limit the prices for some of the businesses or some of the surgeries or treatments, I think on the longer-term trend, the demand for healthcare services and plus some of the lifestyle diseases that are increasing, where the likelihood of this policy action is less, should drive growth going forward.
Okay, time to take a bit of a breather. We'll swim in a very short break, come back, talk more. Stay with us. Welcome back. And, one set of stocks which have actually done quite well this earnings season. It's been mixed bag, but there are a certain section of industrials which have actually done very well this earnings season. And today, at least in particular, there's Technocraft and there's LG. Both of those stocks are high flyers, 5% plus. Siddharth, I wonder from the industrials pack, any favorites at all?
So yeah, I think some of these industrials, actually, if you see Q1 is generally the weakest quarter because Q4 to Q1, but still we saw a lot of companies within the industrial. So there are sub-segments, be it your defense, be it your electronic manufacturing, be it some of the power T&D companies. I think across space, some of the companies have come out with good numbers. Execution has been strong, order inflows has been good. Some of the stocks that we like within the space, Kirloskar Oil Engine, that continues to do well. Siemens came out with very strong numbers from that space. Unfortunately, Technocraft and LG not under our coverage. But I think within the EMS space also, the Syrma as well as Avalon, these two companies came out with strong numbers and continue to remain our preferred ideas.
Okay. In fact, analysts have been seeing quite significant upside across large, mid and small cap stocks over the next 12 months to come, with some counters offering more than 50% potential upside from their current levels, according to brokerages. While large caps, of course, offer relatively steady upside, the biggest potential gains are concentrated in mid and small caps. Ashesha is here with all the insights.
Well, yes, so the Nifty 50 performance over the last 1 year has been muted, although the mid-cap and the small-cap index have given 13 to 13.5% returns over the last 1 year. But the important question now is, which stocks are analysts most bullish on for the next 12-month period? And let's start with Nifty 50 constituents. HDFC Bank is at the top of that list, where analysts see 54% upside from the current market price. That is followed by HDFC Life, SBI Life, Axis Bank and NTPC, where analysts see return anywhere between 42 to 52% on these 4 stocks. So these are the 5 Nifty 50 stocks which analysts are most bullish on for the next 12 months. Let's also talk about broader markets. This is one space where we have already seen outperformance over the last 1 year, and some brokerage houses continue to remain very bullish on something like Patanjali Foods, where the target is 554, 54% upside from the current market price. This is followed by Vishal Megamart, Hoodco, Swiggy and UPL, where analysts see returns anywhere between 45 to 55%. Let's also talk about the small cap basket, HBL Engineering. This stock is at the top of their list, where analysts see nearly 54% upside with a target price of 1,050 rupees per share. This is followed by a couple of other counters like Inox Wind, Great Eastern Shipping, NBCC and Chola Investment. Analysts see nearly 42 to 50% upside on all these counters. Remember, same time last year on the 15th of August, Prime Minister Narendra Modi made some important commentary with respect to GST rationalization, and since then, Indian economy continues to remain resilient, although there have been challenges with respect to West Asia and global crisis that Indian equity markets have been facing. But these are largely the top stocks analysts are most bullish on from the Nifty and the broader markets over the next 12-month period.
Okay, that's a list of stocks with highest return potentials. Siddharth, I'm just wondering, given how the last 1 year has been, do you also believe that perhaps the largest potential still lies within the mid and small caps as opposed to large caps?
So I think the answer clearly lies in what Q1 actually Q4 and now Q1 results clearly show. So if you look at our coverage universe, mid caps, the performance grew almost 25%. The small caps earnings grew about 32%. Compared to that, if you look at the Nifty 50, and these numbers are excluding the oil marketing companies or the commodities per se. So large caps have grown at about, so the Nifty 50 companies earnings has grown about 14% compared to our expectation of 10%. So the earnings momentum is clearly with the broader market, both mid as well as small cap stocks. But what differentiates this market is that this is not a broad-based rally that you will see. You will see very selective stock-specific action within sectors also, companies which are delivering strong earnings growth, plus they have a positive outlook where there I think is where the market is willing to give reward both in terms of the growth as well as in terms of valuation multiple. So clearly I think the next 6 months to 12 months market momentum is likely to remain with the mid and small caps.
Okay. Your favorites, Siddharth? I mean, we just pulled out the consensus favorites and Ashesha presented those. Your maybe top stocks next 12 months or thereabouts, if you can give us a view.
Sure. So again, two set of stocks. Within large caps, I would take few names. For example, Bajaj Finance, we see a 14-15% upside. M&M, Eternal, and Samvardhana Motherson are some of our large cap ideas. Within mid and small caps, we like Lenskart. Within the healthcare pharma space, Emcure Pharma is something that we have been increasingly liking. Syrma, SGS Technologies from the EMS space, and with the banking, mid-cap banking name RBL, we believe with the new management in place and now delivering consistent earnings growth, both the again earnings growth as well as re-rating candidate becomes RBL Bank. So these are some of the preferred ideas from the next 6 to 12 months perspective.
And then there's Jubilant, right? I mean, you've seen some very strong numbers coming from Popeyes. I wonder if